Mangalam for more cues on what we can pick up from the F&O space. Mangalam?
Well, there is no respite for bulls. We've been talking about that. And as we speak, even in the first half of trade so far, at any point, if one went short, they would be making money. This after the market having seen a big gash over the last 5 days. So the Nifty Bank, the mid-cap index, all of them are at the low point of trade. And any data point that you look at is telling you that there is weakness. NSE declines. Now, 2,400 stocks are in the red for just about 500 stocks which are in the green. That line would look like parallel lines and now has widened with the red one being much above the green one. There's also, it's come along with the India VIX, which has seen a big spike too. Typically, when the India VIX spikes, the market falls. There is an element of fear which is underway. Two-wheeler players, the ones which actually did very well all of last year, they're coming in for some sell-off too. So Hero MotoCorp, Eicher, TVS, Bajaj, the ones you look at, all of them at the low point of trade as well. We're seeing some stocks buck the trend, but they've not been big movers on either side. So Coal India has done well, yes. IEX has been fairly volatile, continues to see some buying after the decline that we saw on Friday, and NTPC is mildly in the green as well. Rally continues for Hindustan Copper and Hindustan Zinc. These stocks are in a story of their own right now, and those stocks are at the higher end of range. But even if you look at all the other data points that tell you that, the points are moving towards an extreme, there is still no respite. The FI is there 7.5% long. This was 13% at the start of the last week, which is anyway lower. The FI has increased their short positions and they're still making money on them. So no case for immediate short covering. Typically, the market bottoms out at these panic levels, but the panic continues. The Nifty now down about 850, 860 points from its highs in just the last 6 sessions. If you look at the call selling, the call sellers are active at 25,600, 25,700. Now, as we speak, increasingly 25,500 as well. So all these levels are crucial as bears are coming in and, putting their stronghold at these levels. Put sellers at 25,550 were fairly active today. Now let's see whether they are unwinding their positions or not. And the 25,500 put writers, there is a fair amount of open interest. The Nifty on the verge of breaking that 25,500 mark. If it breaks below that and sustains around that 25,450 to 25,550, these put writers would be caught on the wrong side, and that would accelerate the selling for our frontline index. The put call ratio is at 0.7, again at the lower end of the range. But then when there is panic, there are no levels which are respected. A lot of shorts added on Hitachi and BHEL after these stocks having seen a big correction in the last 2 tradings itself and selling off for the 3rd trading session. And there is still a fair amount of short build-up. So the ammunition for the bears is a lot more than the ammunition for the bulls. The only thing that one needs to watch out for is whether the market stops falling, and then only we can look at any sort of reversal and short covering. The key point right now, the market should stop falling.
That is the key point. But